Two bad investing behaviors that most investors have. I'm Max with Stock Masters, and today I'm going to talk about just that, two behaviors that are going to drive down your performance in the stock market and give you suboptimal results. We'll jump into it. Please like, comment, subscribe. Much more to come. The first is selling in and out of positions too frequently. And by that I mean, you're constantly checking your portfolio. Coke went down 3%. You got to get out, bail. We're bailing ship. You don't want to do that. In fact, I remember Warren Buffett saying this: the most successful investors are dead people and people that forget to check their portfolio or their password or something, because they're not selling in and out of positions. They're letting the stock or the fund or the ETF or whatever, they're letting volatility take place, because after all, over time, stocks and funds and ETFs, over time, they tend to go up in value. ETFs and index funds a little bit more consistently, because you could have a very bad stock that starts performing very poorly and just consistently goes down, which is maybe a good argument for why you should not really invest in individual stocks. Because with an index fund or an ETF, you don't have to ever check the index fund or ETF. Based on historical data, which doesn't always predict the future, but there's a pretty strong probability that an index fund or an ETF is going to continue to increase in value over time, right? So the first mistake, selling in and out of positions much too frequently. And again, the best way to avoid this is just don't check your portfolio. Don't give yourself the opportunity to buy and sell, because if you give yourself that opportunity, you might mess up. Also, like I said, maybe just invest in index funds and ETFs. Ticker symbol VOO and chill, right? By that, I just mean buy the S&P 500, close your computer and never look at it again until you're a few decades when you need the money. I don't know. So that's the first one, is selling in and out of positions too frequently. Number two is checking your portfolio too often. And sometimes people are checking their portfolio daily. Right here, can't stop checking my portfolio. When's it going to be $5 million? Never. Not really. But checking your portfolio daily does nothing for you. It's like checking Instagram, more or less, right? You're just looking for a quick little escape from reality, escape from your job, right? Or whatever. I don't know. But yeah, you shouldn't be checking your portfolio daily. It doesn't do anything for you. It's a waste of time. In fact, you'd be better off looking for better investments. That time you spend checking your portfolio on a daily, weekly, whatever basis. And to be fair, I do check my portfolio, like when I'm being good, on a monthly basis, because I like to track my net worth across all my investment accounts. It's just something I do on a monthly basis. When I'm also doing my monthly budget and all of that, I'll go and take it takes like 5 to 10 minutes, accounting of all, which is something I like to do just because I like tracking the data. It's just cool to see how it fluctuates over time across all the different accounts. With that said, I mean, you don't have to do that. And I mean, you don't have to check your portfolio at all. Now, asterisk, I just thought of this. If you are an older person and you are relying on your portfolio for income, maybe you do want to check it a little bit more often, because that's essentially your employer and they might not be paying too well. Not really. Well, yeah, really, but you might want to check it a little more often. I don't know. And yeah, if you're someone that doesn't need to check your portfolio often, then don't. And the best way to do that is delete the apps off your phone, which I've done in the past, and I reinstalled it, right? Because I was like, oh, I'm not going to check it. Delete the apps off your phones, turn your phone off, have a little bit of discipline. I can't do that, but that's a tough one. But yeah, just try not to check your portfolio too often. Actually, for a while, I had the checklist where every day I didn't check my portfolio, I would check a box. And that actually worked really well, and I stopped doing it, probably because I just got lazy, but could try that. So the two bad investing behaviors we discussed are selling in and out of positions too frequently. Don't do it. You're missing out on gains, because it's just not... You're missing out on the stock or the fund doing its work. Let that thing cook and it's going to get big and fat. So that's number one. And then two is checking your portfolio too often. Don't do it daily. Don't do it weekly. Monthly might be all right. But yeah, let's just say that. Don't check it. Don't check it daily, weekly, or biweekly. Anything other than that, it's like having a little bit of having a drink. Just don't do it too often. So that's it. I'm Max with Stockmasters. Thanks for tuning in. Comment down below what your thoughts on these two. How often are you checking your portfolio? Let me know if you have any other topics to cover. Whatever. Catch you in the next one.